Hello, my dear viewers. This is the Dukas Copy webinar or Dukas Copy Academy. And you are watching Forex Trading with Rakesh. Today is the 1st of January 2025. The day is Wednesday, and this is the first non-trading day of the week. When I say non-trading day of the week, because most of the Forex and basically most of the markets are down, and only Bitcoin, or cryptocurrencies are being exchanged today. So I thought that I will not do webinar today, but then I saw that on YouTube it was planned for me. So I thought I will share some of my ideas with you other than the chart. Of course, I'm going to share my levels with you, but I thought that I will give you a detailed plan on entry and exit for one pair. For one pair of your choice, if you are here with me live, if you're not here with me live, then I will take just any random market, like say we will take Euro USD for that matter. Okay, just I'll show you how to plan a trade in the day. Okay, now those who are new, they might be thinking that I am a member of Dukas Copy, you know, employee. No, I'm not an employee. I'm just a member of the community. I'm an independent trader. I'm just sharing my information or knowledge, whichever I have, with you. I'm using the charts to showcase my analysis. And since the markets are not moving such, so I will be only sharing my levels with you. Now to share my levels, of course, I will have to take you on my charts. Before I take you on my charts, I must tell you that nothing I say over here is a trading advice. This is just for increasing your knowledge or information about how to read the chart. That's it. If you want to trade on the real money, please do your own research. You can watch this video or webinar as an entertainment. Now let me take you to a risk disclaimer, because Forex is traded on the margin money. Please understand the risk that is associated. Then we move to the charts. All right, so right now on your screen is the dollar index. You can see that the market is closed, the price is not moving. The time is moving, but the price is not moving. 108.26 is where the price closed on 31st of December. So we will need tomorrow or 11 hours 52 minutes for the market to open actually. So what I'm going to show you here is that just this, that the US dollar is going up. That's all. Okay. Yes, I'm expecting it to reach 50% of this, and thereafter actually I'm expecting it to reach higher also. But let us see if it can reach 50% of this or not. Pound, we are expecting to go lower next week or this week. Till Friday, we are expecting it to go lower. Euro also, we are expecting it to go lower and dig into this fair value gap. You can see here. Australian dollar, we are expecting it to go lower and dig into 0.6170. Okay, I'm just showing you my expectation quickly to you, but then I will be sharing with you one entry procedure. Okay, this is very beautiful entry procedure and you will love it, I'm sure. Please let me know in the comment box after you see the video, how did you find this, is it useful for you or not, and that is applicable to any asset that you trade. Okay, New Zealand dollar, we are expecting it to trade lower. USD CHF, we are expecting it to trade higher into this fair value gap at least. USD JPY, we are expecting it to trade higher. Bitcoin, we are expecting it to trade lower. Why? Because it closed the day below the bullish fair value gap. That is a problem, and the bullish fair value gap is stopping the price from going higher. And I will frame a trade right now in front of you in the Bitcoin also, okay, for 5 to 10 minutes. Then Brent, we are looking for going higher. Why we are looking for it to go higher? Although the fair value gap has stopped the price, but I see that this price has come from this change in the state of delivery. So till the time there is no change in state of delivery, or we don't see a bearish candle closing below the opening of a bullish candle, we cannot be saying that okay, now it's time to go lower. So the time is to go higher still. Gold, I'm expecting higher prices now, because it has closed above the opening of this red candle and has taken the sell side liquidity. So tomorrow or day after, I will be expecting higher prices in this one. Euro JPY, I am looking for the lower prices now. Pound dollar, I am Pound Aussie, I'm looking for higher prices. CHF JPY, I'm looking for lower prices. Now you see the market structure shift and expected lower prices. Aussie New Zealand, I'm looking for the higher prices. Gas, I'm looking for the lower prices now. Now you might be saying, oh, this has not closed below 50%. Why you are looking for the lower prices? Because this has changed in the state of delivery. So any rise should be seen as a selling opportunity. So EuroCAD, I'm looking for the lower prices. Ethereum, I'm looking for the lower prices. Euro CHF, okay, this is just for question. So I was going to tell you how to frame a trade. So I'll take an example of the euro. Now you know when we have taken this liquidity here, you see, okay, you see I had a candle here. When you see, you can actually put an alert over here. Okay, how you do this? I think we cannot put an alert on the, can we? No, no. But what we can do is we can remove this, and then whatever is the high, you see here, you see what is the high of this candle, that is, no, not the high of this candle, the high of this candle, this is 1.0447, right? So what we do is we create an alert 0447. So when the price is at 0447, we create an alert on that. Okay, so this is at high. What is high? 74474. So we place an alert over here, right? As soon as the alerts gets triggered over here in this candle, so we frame it like this. Okay, and we go to the lower time frames. At least from 1 hour we can start watching. So when the price breaks this for the first time, we understand that okay, there is a change in the state of delivery because the liquidity is taken, and after that below the opening which candle is closing. This is the 1 hour. So I will go to the 15 minutes because there's a lot of fall in that. So yeah, this looks good to me. Why? Because on the 15 minute you can easily frame a trade over here. What is happening here? You see, this is very simple. Just take a trend line, mark the opening of the candle that has taken the liquidity. Okay, this is simple. You have marked this candle. So now this is your change in the state of delivery. So if the price closed below this, okay, then you will start looking for the selling opportunities. But you have to see that on the lower time frame, less than 15 minutes, is there any fair value gap in that leg? Okay, I mean, when this candle was going down, did it create any fair value gap? Now you see when this candle was going down, did it create any fair value gap? Yes, it created a fair value gap. Which is that one? This is that one. So this is your entry. Simple. Either you can enter at this area here, or you can enter at the 50% here, or you can say change in state of delivery here. Now this is on the 15 minute, right? So you go to 15 minute, this change in state of delivery or whatever you call it, this is also called order block. You take the 50% of this and mark it as your stop loss. You see this white line, middle white line is your stop loss. It never got triggered. It never got triggered. This can be a stop loss, or if you want to be sure about your stop loss, then you go to the 5 minute, the candle which has created the fair value gap, you mark the high of that candle as the stop loss. Now in this case, if you see, this candle has created the fair value gap. Do you see this candle? This is first candle, this is second candle, this is third candle. First, second candle, high. Whatever is the high of this candle, that will be a stop loss. Has it ever got triggered? See, no. Where will be your target on the same 15-minute time frame from where the change in the state of delivery has happened? When there was last change in state of delivery, you see here the price was going lower, and here this candle closed above this. So you mark this like this, and this becomes your target. Guys, this becomes your target. Is it not simple? Enter here, stop loss here. It is like 1:6 or 1:7. Or you can also target the equal lows at the sell side liquidity. This is so simple because you have entered on the 15-minute time frame from the 5-minute fair value gap to a daily sell off. to a daily sell off, guys. This is huge. This cannot be better than this. But you got the idea, right? Now, this is one trade. I want to, give you another idea. Say in the Brent, we will do it. So you knew that there was an order block here or change in state of delivery. So from here, if you started selling, you can sell till here, right? Now, when the market traded this area, you wanted to buy. Yeah. If you want to buy, what you do, I'll show you that place. Okay. Same scenario, guys. Nothing special. Same scenario. In this case, what you will do is that you will look for the bullish change in the state of delivery. You see, this is the lowest candle close. After this is the 15-minute candle, right? But this candle actually closed above various red candles. So what we will do is we'll check that, yeah, it actually closed above this, right? Okay. First, we will inspect this one here. That after closing above this, has it given you any fair value gap on the 5 minutes? If it has given you any fair value gap on the 5 minutes, then that becomes your entry. Here you see, yes, it has given us a fair value gap, but it did not tap to that fair value gap for us to enter. Do you see that? It never, but then on the next day or maybe somewhere else here, it came to that level again and give us an entry. Yes, but also has taken a stop loss. Of course, it never went below this change in state of delivery and kept going higher. This was not a very good price action because it did not give us any entry. Yes, there was a bullish breaker entry, but I have not taught you that, so I cannot talk about that. Let's see in the euro yen. When this high was taken out, say, when this high was taken out, was there any way of us to enter that area? We will check it out. Okay. When this high was taken out, okay, was there any way for us to enter the trade? Okay, from here we could enter, but the stop loss would have been bigger. Let us check in this leg. Okay, this liquidity was taken. Thereafter, there was change in state of delivery. You can see this one. Okay, the price closed below this open. When it closed below this open, did it give us any fair value gap on the 5 minutes? We will check. Okay, and we check, then we find, I'm just marking it, that there was this fair value gap. Let us enter this fair value gap. Okay, and keep a stop loss above the second candle here. Boom, till next fair value gap. Is it random, guys? This is a gold. Okay, I know you will say, oh Rakesh, it also gave you it took the liquidity. Actually, it did not take liquidity here. It took liquidity here, and then it gave a, on 5 minute it gave you entry. How? This was a change in state of delivery. This was a fair value gap on the 5 minute, but I'm sure there will be a fair value gap on 1 minute also. This is the one, right? Change in state of delivery. Then there is a fair value gap you see here, and very next candle it gave you a rejection. And where should be the stop loss? Stop loss should be above the candle which has created the fair value gap. This is the fair value gap. This candle created the fair value gap. This is the high. That is the stop loss. It never got traded. And your target can be previous lows. These lows. Guys, this is so simple. This cannot be easier than this. I hope you have understood the concept and you have understood what I'm talking about. If you have any questions at any point of time, you can tell me. These are the entry and exit procedures, okay? And this is how you measure the change in state of delivery, provided you have your higher time frame analysis like daily. We knew that what we are looking for on the daily, right? Here, we were looking for the euro yen to go and take this sell side and then get rejected. Now, also we are looking for the euro yen to enter this area and then get rejected to the upside. So anyways, you can check it if there is a change in state of delivery on 15 minute, 5 minute, 1 minute, and then trade accordingly. I hope this was insightful, and I expect some questions from you in the future on this if you have any. If you don't have any questions, then I cannot be more happy. All right. All right. That's all, guys, from my side. At any point of time, if you have any questions, please let me know. So if no, then I will just wrap up the session. And I will see you tomorrow. Alright, guys. I hope you know about the support and resistance levels that will be of interest in the coming hours and days. Just remember to only risk 1% of your capital on any single trade and look for a potential profit of more than 3 times the risk that you're going to take. With this note, I shall end this live stream. Please press the like button if you find this video useful for you. You can leave your suggestions in the comment section and consider subscribing to this channel for more such webinars. Have a good day. Thank you for watching. See you tomorrow at 700 GMT. Till then, bye bye. Take care.